So this is Business Incorporated, Tuesday, December the 13th, and we're live to you this time from Channel's global headquarters in Lagos. I am Bosun Umafai. In the next 30 minutes, private equity investor Leapfrog targets Africa with fresh $800 million investment. The Republic of Benin may seek IMF funding support as neighboring Nigeria's economic problems hurt. Also, the International Monetary Fund has approved $94 million for Côte d'Ivoire. Now let's get started. Nigeria, Kenya, and Ghana are among other sub-Saharan African markets targeted by Leapfrog Investments, a U.S.-based private equity firm looking to raise $800 million for Pan-African investing. Leapfrog Investment is seeking interest in Africa's banks, insurance brokers, and payment companies, a report on Bloomberg says. On Tuesday, the Washington-based Overseas Private Investment Corporation has approved an investment of as much as $200 million in Leapfrog Investments, as well as billionaire George Soros. Leapfrog is betting on investments among companies that target Africa's emerging consumers, with focus on Nigeria's population, the sophisticated consumers in Ghana, and buyout opportunities in the Kenyan market. So let's talk about the markets in Africa. All are looking up on Tuesday. The Nigerian stock market reopened today on a positive note and is still in session until 2:30 local time. This is a snapshot of some of the continent's equities market about an hour ago. The South African JSE, the largest equities market on the continent, trading above 15,000 level. They are significantly higher, 1.31% in mid-session. The Egyptian market, shaving off a little bit of yesterday's gains, started green in the morning, and lunchtime started tapering off about less than 0.1%. And of course, the Kenyan stock market closed yesterday for a national holiday celebration. And then the market, that was the Friday figure, about 0.25%, 0.7 for the Kenyan stock market. Then we'll talk about the markets in the Nigerian markets reopening today. The debt office plans to sell 95 billion naira. That's about $302 million worth of sovereign papers. That's the last debt auction for the year. The financial regulator or the central bank will also hold a primary market auction tomorrow, Wednesday, with treasury bills worth 147.50 billion naira. So how the markets positioning for these offerings? Let's talk to Ifeanyi Akweche, who is a fixed income dealer with Wema Bank, and he joins us now via telephone from downtown Lagos. Good afternoon, Ifeanyi. Thanks for coming through on the program.
Okay, good afternoon. Thank you.
It's good to see you. So what's the market looking like on the first trading day after the public holiday?
The fixed income market, the first trading day of the week, is not very active as it was the last week. As at last week, we saw a lot of bullish trend in the market, especially as a result of some inflows into the market to the tune of over 400 billion. You know, but as at today, the treasury bills market is a bit active with focus on short-term maturities. For the broader FGN bond, the interest is actually at yields of over 16%, you know, as of today. So that's where the market is currently trading at.
But what's the main focus as far as the DMO sovereign debt and the treasury bills auction from the central banks are concerned?
Just like the first quarter. The calendar for treasury bills just came out some few days ago. We've seen that the treasury bills primary market may not be offering more than the maturities that we have. That tells us that the CBN will not be borrowing so much from that market. But considering what is happening in the market, at least as of today, we've seen that a lot of dealers are trending down and they are trading as the CBN keeps supplying the market with home auction. We have already an home auction for today, so the result is yet to be announced by the CBN, but we expect some sales at 18% and 18.6% for the short and the long term.
Ifeanyi, thank you very much for coming through to us. We appreciate that. Tuned up the market for us, the fixed income side of things, starting the week. Let's get across and cross over to the Middle East. Let's check through the markets. Now, The oil-led rally that started over the weekend begin to taper off today as the markets get onto the better part of the new week. Take a look at some of the region's exchanges. How are they holding out within the past hour? Look at the numbers there on your TV screen. Abu Dhabi negative by 0.2%. The Dubai financial markets about 0.87. The Qatar market down 0.35, and of course the Saudi market about 1%. Those numbers were about an hour ago. Okay, so let's move on and get back to Europe, where the market's expecting a raft of economic data, including the UK's annual inflation seen at 1.2%. The German's inflation rate came in today unchanged. That's for the month of November. And in business, Italian lender UniCredit is raising $14 billion in rights issue and plans 14,000 jobs cut. Let's talk through these stories with Conrad Boson, my financial colleague at the Frankfurt Stock Exchange in Germany. Good afternoon, Conrad. Thanks for coming through. Let's start from our home front. As far as you're concerned, the German's inflation rate unchanged in November, despite the efforts of the European Central Bank to boost consumer prices across the member states of the Eurozone. Talk us through this, Conrad.
Well, Boson, it's true the inflation, consumer price inflation here in Germany is very low, very muted, but this is not going to stay that way, and this has to do with energy prices, with the oil price. You know, the reason why we haven't seen really significant consumer price inflations for so many months now here in Germany has to do with the fact that oil was so cheap. But, as we reported yesterday, the perspective that production will be cut next year already has made the oil price increase, which is the reason why now people on the markets expect consumer price inflation to increase in the coming months. And what's more, the simple fact that consumer prices and that oil was so cheap for so many months now means that future consumer price inflation will be higher. The basis effect will cause inflation to be higher in the time to come. And